Welcome back. And as predicted, the shorts on MicroStrategy have begun with legendary trader Jim Chanos making an aggressive short position on MicroStrategy. Now, if you guys have been watching my videos, you know my viewpoint on the markets and that I think in the 12 to 18 months after the Bitcoin halving, that's when we see the most volatility based on historical context in previous cycles. And therefore, we are in the 12 to 18 month period after the Bitcoin halving, and we're going to see a lot of volatility. But with this volatility, we also have to look for top signals. And one of the top signals that we've talked about is the idea that the social sentiment is that people are going to start quitting their jobs. They're going to start living off passive income from all of this leveraged play products like Bitcoin, like MicroStrategy, like 2x MicroStrategy, like the MicroStrategy option dividend ETFs that we've been talking about for years in this channel. But in my view, these indicators, right, of people saying, oh yeah, I'm going to live on this passive income for the rest of my life, and I'm going to quit my job and all of this, and I'm going to, buy a house here, and I'm going to buy a house here, I'm going to buy a G-Wagon. Guys, this does not last forever, and the markets do not always continually go up. They can go up for a length of time, but they can also go down over the length of time. And what we're going to be talking about in this video is why Jim Chanos is shorting MicroStrategy, why you may want to short MicroStrategy, and really kind of understanding these leveraged plays and the leverage bets in crypto. Because if you remember in the last cycle in 2021, the market came down in 2022 because of the leverage bet. Same thing happened in 2018. So we're going to break it all down for you. Make sure you guys are subscribed to the channel. Give the video a free thumbs up. Thumbs up are free. Crypto is not. And losing money is not free either. Let's get into it. So one of the things that we've been talking about with MicroStrategy and this MicroStrategy play is that it is a quote unquote leveraged bet on Bitcoin, right? Because why would you not just hold the Bitcoin underlying? And one of the things that we've talked about before is that MicroStrategy's founder, Michael Saylor, didn't have any of the stock left. Well, that has changed. A lot of you have let me know that he does have 20 million shares now. And I went into the SEC filings, and I did see that he converted some of his, I think it's like voting shares into actual shares or something like that. But yeah, now he has 20 million shares, right? But remember, just a few years ago, he had, millions of shares, and he sold them on the open market to go buy Bitcoin, right? Even Michael Saylor is a Bitcoin maximalist, right? And so understanding, what MicroStrategy is doing and the valuation of where MicroStrategy should be, and then understanding that it is a leveraged play because what you're paying on the open market is actually higher than the underlying Bitcoin. And if you take the Bitcoin out of the picture that is purchased via debt, meaning you as a shareholder, if the company went bankrupt, would not be the first in line to get payment if that Bitcoin was liquidated. It would be the creditors, right? And you as a shareholder are not a creditor. So actually the Bitcoin underlying each share is significantly less. Now, this does not mean that you can't make money on this stock. I've made money on the stock. Probably many of you have made money in the stock. But I don't see this as a long-term hold. Why would you not just hold the Bitcoin directly versus holding MicroStrategy, which there is that risk of, number one, it's a counterparty risk. Number two, it's a third-party custodian outside of MicroStrategy. And number three, this is basically all being purchased with debt. And this could work out in the long term, but guys, the market can stay solvent longer than you or I can, right? And MicroStrategy is focusing their efforts on this long-term institutional and government level strategy. It literally has nothing to do with you or I. So we can't afford to deal with the fluctuations over the course of time and potential liquidations and bankruptcies and stuff like that the same way MicroStrategy can, because they are never planning on selling their Bitcoin ever, ever, ever. And they're going to be taking out debt and using all these other instruments to raise money versus selling the Bitcoin. But there's a lot of risk here, at least in the short term. So the short-term risk is what is happening in the markets and this over-leveraged play and people becoming so irrationally exuberant about the market that the smart money starts to short the market and sell out of their positions because, again, sell the rip, buy the dip. The RIP is exit liquidity. It literally is the wealth transfer. And I'm going to be showing you a video of an NYU professor who talks about this wealth transfer that's underway right now. And while it doesn't really have anything to do with crypto, it somewhat does, because if you're in this asset and this asset performs according to what the thesis is, as you know, the governments keep printing more, this will devalue the currency and increase the value of this underlying hard asset, Bitcoin. And so Bitcoin can pull you out of that trap of the wealth transfer if you know what you're doing. If you're just looking at this whole market as a get rich quick scheme, guys, that's not how it's going to work. I'm still doing YouTube videos, and I've been on YouTube for almost 10 years, and a lot of other people are on YouTube a lot longer, and they're making a lot of money, and they're still doing YouTube, right? It's not this get rich quick and you're gonna, that you're just gonna go live on a beach the rest of your life, right? You have to really understand the fundamentals of where this market is, where this market is going, and how you can capitalize to continually increase your wealth. But this idea that you're never gonna sell the same way that MicroStrategy says it is ridiculous, because most ordinary people will need to sell to increase their wealth. MicroStrategy doesn't have to, because they have a lot more money and they have a lot more creditors willing to just give them money. Anyway, investor Jim Chanos is simultaneously betting on Bitcoin and against MicroStrategy. He said, quote, "We're selling MicroStrategy stock and buying Bitcoin and basically buying something for $1, selling it for $2.50, according to the former hedge fund magnate. MicroStrategy is considered a proxy stock for Bitcoin. However, the company has used leverage to amass the Bitcoin stockpile and trades at a large premium to its Bitcoin holdings. Like I just said, they talk about Bitcoin per share, but if they're buying the Bitcoin with debt, you as a shareholder are not owed that Bitcoin. You're not first in line, second in line, third. You're like last in line as a shareholder to get any of that money from the bankruptcy. And so therefore, you would not actually get anything in an event of a collapse. And a lot of people are not looking at that saying, no, it's never going to happen. Well, never say never, because remember, FTX, all of these companies, hedge funds, governments, they were investing in FTX. They weren't investing in Coinbase, the regulated legal company in the United States. They weren't investing in Gemini or looking to work with any of these companies. They were working with FTX. Pension funds were giving their money to FTX to invest in FTX. Meanwhile, FTX didn't even have a bit license in New York, and nobody can answer the question, why not? So there was a lot of risk back then that people were just, I don't know, ignoring or didn't see. I can't imagine these very smart individuals could not figure it out, and us on YouTube were able to, right? So I do think that they knew that it was a leveraged bet. I just didn't think that they were accounting for the risk, right? And so he said, if you look where MicroStrategy is now, more ominously, some of its copycat companies are now raising lots of money, and they're doing basically is selling retail investors the idea that we're going to buy Bitcoin in a corporate structure. Because of what MicroStrategy has done, you should value us as a premium. Chanos labeled that thinking ridiculous, saying we're doing exactly what MicroStrategy and Michael Saylor are doing. We're selling MicroStrategy stock and buying Bitcoin, and basically buying something for $1 and selling it for $2.50. Effectively, what they're saying is, like, one, Bitcoin's going to go up, but number two, if you're buying it, MicroStrategy is paying a premium effectively. I mean, I do think that they are paying ridiculous. I mean, MicroStrategy is buying the top of the market, and all these other companies are buying the top of the market as well, right? And so what we've talked about is the thesis and the strategy by selling MicroStrategy stock and then buying Bitcoin. Effectively, they have like almost unlimited shares at MicroStrategy. A lot of holders don't even fully realize this. In January, they approved share increase to 10 billion from 300 million. Now, not all these shares are in existence yet, but they can keep printing the stock to keep selling it. And Michael Saylor has said that they will, every time MicroStrategy is selling it, the stock market value is higher at a premium to the Bitcoin underlying, they are going to sell shares in the open market. And so this is bearish MicroStrategy, especially understanding they're going to continue to do this. And at some point, we are going to go into a bear market, right? Maybe it's going to last for a week, maybe it'll last for a month, maybe it'll last for 2 years. I'm more on the side of 2 years because that's what the 4-year cycle looks like. 2 years bull, 2 years bear, not exactly, but generally speaking. And so, do you want to be in Bitcoin during that period or MicroStrategy during that period? I'm not saying MicroStrategy is going anywhere, but the valuation, especially with the stock dilution by them selling shares in the open market to raise money to then go buy more Bitcoin, this is going to pump Bitcoin, not necessarily pump MicroStrategy. And it may just keep MicroStrategy level for the next few years and everybody's super bullish on it. And then it does a 10x and it keeps those people super bullish instead of realizing that you could have just 10x'd after that or 10x'd after that. This is the same issue that we're seeing with other leveraged MicroStrategy products as well. Now, by the way, the reason we're talking about MicroStrategy is because it's the biggest, but this is translatable to pretty much every other ecosystem in crypto or the stock market, right? Over leverage can be a huge concern and risk. And so shorting MicroStrategy, which is what Saylor was doing by selling his shares, you can go on the SEC filings or go on the NASDAQ website and look at insider sales. Over the last 3 years, MicroStrategy's Michael Saylor sold millions and millions of shares on the open market. Then he converted some of the shares into regular shares, and now that's why he has 20 million shares. But before the last 6 months or so, before he converted those shares, he had 0 shares left because he was selling all the stock in MicroStrategy. So he's doing exactly what Jim Chanos is doing. Meanwhile, Jim Chanos is getting a lot of backlash. He said, wow, people get very upset when you point out that they're buying $1 for $3 and doing exactly what their favorite company is doing. Guys, when you're buying MicroStrategy, you're not getting one Bitcoin underlying that's worth $407, right? You're getting a fraction of a fraction of a fraction. And if you actually do the math, which I can do, I did it off the video, so hopefully we can do this again. If we take the market cap, which is $112 million, $1 billion, I should say, $112 billion. Let me just make sure that that's correct. Yeah, $112 billion. And this is the strategy website. And each share is about $408. So we'll divide this by $408. And that brings about 276,000 shares that are currently in the market. Now, if we take this number and we divide it into how many Bitcoin they have, let's just pull this up on a separate chart. That way we can make sure that we have the numbers correct. So we're going to take 568,840 Bitcoin. We're going to divide it by 276,000, a million shares, right? And this is how much Bitcoin is in each share. Just if you took all their Bitcoin and divided by the number of shares. Now we have to multiply this by about $104,000, the price of Bitcoin. So that means in each share of MicroStrategy, effectively, you're technically getting $213 worth of Bitcoin, which is basically half of the price of MicroStrategy, which means the MicroStrategy price is selling at a 100% premium, or a 2x or 1x higher than what the premium of the Bitcoin underlying is. But remember, you as a shareholder are the last in line to get claim to that Bitcoin if the company goes bankrupt. So this number, $213, is actually significantly less, maybe $20 or $50. So you're paying $408 for potentially exposure to $50 worth of Bitcoin instead of just spending $408 on the Bitcoin itself. The idea behind this, in my view, is that people believe that the MicroStrategy stock is going to perform better than Bitcoin will in terms of pumps. And while historically you could say potentially this is true, it's not. I mean, people think, oh, but Cryptoviser, they're going to split the stock again when it hits $1,000. It's like, why do you think it's going to hit $1,000 if Michael Saylor is going to keep selling in the open market? And this is where the idea behind shorting MicroStrategy comes into play. But remember that this is not buying Bitcoin. This is buying into a company that's buying Bitcoin. And they're not trying to make you rich. They're trying to buy more Bitcoin. That's it. And so buying the Bitcoin is obviously going to be bullish for it. But this is a wealth transfer in my view. And this final stage of the bull market is a wealth transfer, right? As people are buying into the market, whether it's you as retail or it's in institutions like JP Morgan or BlackRock or whoever else, They are buying, somebody is selling. And so that's the transfer of wealth. Because once you head into a bear market and the buying stops, let's say MicroStrategy slows down their purchasing, GameStop slows down their purchasing, Marathon Digital slows down their purchasing, and we don't hear from any other big companies making purchases, right? Boom, price goes down, people get liquidated, price goes further down, people get liquidated, and then you can't find a buyer because the institutions may have slowed down completely because they have patience, they can wait till the market bottoms out. And all these companies are slowing down because now the lending and the debt is tightening up because the markets are not doing as well. And so then you don't have a buyer. And so the wealth transfer already took place, and now you're stuck at the bottom of the market, unable to sell your coins for anything in the profit, like in the green. You're all in the red. And so then what do? You got to wait, or you got to rotate into other things that are going to perform better. But don't get it twisted, guys. This is a wealth transfer. The money is going from Wall Street to the people who are selling the coins, not from Wall Street to the people who are buying the coins, because Wall Street is buying. But at some point, Wall Street is going to slow down the buying and see what happens with the market. And they understand the 4-year cycle. They understand the market's going to go into a bear market. They understand the over leverage is going to have to be wiped out at some point, and that's going to cause mass liquidations. So that is the wealth transfer. People are always like, oh, there's going to be a wealth transfer. No, we've been through multiple wealth transfers. 2008, wealth transfer. 2020 and 21, huge wealth transfer. Guys, everybody had the opportunity in 2020. Everybody was at home. Most people were not even working, and they were getting paid. And most people did nothing with that time. Think about that, guys. They did nothing with that time. On this channel, we ramped up production. We really refocused on building the strategy, focusing on the markets. And we did really well in 2020. You know, we were trading a lot of different cryptos and stocks, looking at the market, getting prepared for the massive bull run that we saw in 2021, preparing for the bear market in 2022 and to 2023, and then preparing for what we're in right now, the bull market. But a lot of people took that time in 2020 and they just sat at home, ordered DoorDash, and got paid. And then they went back to work a few months later like nothing happened. That was a perfect opportunity to get ready for wealth transfer. And the wealth transfer went underway when people were home. You don't remember that? Like people were buying Bitcoin, they were talking about NFTs and all that kind of stuff. That was all in the last cycle. Anyway, what is the wealth transfer? Well, let's listen to what NYU business Professor Scott Galloway said about the wealth transfer. And by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. We talk about all of these different topics and really try to break down where we need to be, when we need to be there, and focus on, building our investment portfolio for our future and our retirement. So let's listen to what this NYU professor says about the wealth transfer. Yeah, I'm going to pause right here for a second because we've talked about this before on the channel. I am not against Social Security. Don't get it twisted. I am not. But it is a wealth transfer, right? Because there's people who have one pension, two pensions, a household with 3 or 4 pensions, right? And remember, my generation, there's no such thing as pensions. Maybe some government employees do have pensions, but they're not like what they used to be, where you could, one person in the household, work a job for 30, 40 years, get out with a pension paying almost what they're getting paid right now. We don't get that anymore. But anyway, these households, sometimes 4 pensions, and they're saying they're not getting enough from Social Security. It's like, wait, you're getting 4 pensions of $50,000 each per year, $200,000, and you're worried about an extra $20,000? Like, that's not what it's for. It's for somebody who doesn't have a pension, right? Or who needs that supplemental income because they don't have maybe health insurance or whatever the situation is. And again, the next generation, it's going to be even worse because a lot of people in my generation and younger, and maybe a little bit older, they don't have retirement. So Social Security is going to be extremely important, and it's not going to be enough, right? It's just not going to be enough. But it is a wealth transfer because the younger people are paying into it. And it's paying out to the older generation that has those pensions that may not need the Social Security, right? But again, the whole idea behind the whole Social Security program, it's very conflicted. Again, people either agree with it or disagree with it or want it to change or don't want it to change or whatever the situation. But it's a wealth transfer, right? And think about like the older generation now. I mean, Congress people refuse to retire, right, at 90 years old. Younger generation, it is unbelievable to me how many old people are still driving today. You know, in when I was younger, they would take the keys away from the old people when they reach a certain age. And now with all of the, Ubers and Lyfts, nope, old people are still driving. Like they're just not giving anything up. And we've done stories about, the boomer generation refuses to even discuss finances with their kids. And when they pass away, the kids have no idea what they have, where their assets are, how to recoup them, and all that situation. It's really crazy to think about, right? That the older generation is so wealthy, generally speaking. And they say everybody in the younger generation is just lazy and doesn't want to work. But meanwhile, they're just literally having money just handed to them. And the younger generation, they're going to work 40 hours a week and it's not enough. And they're having the older generation say, well, you're not working hard enough. There's only one way out of it. It's Bitcoin. Let's continue listening in. Because it's still this way, right? The majority of people who own these homes, it's the older generation. And they're not budging now, right? They still want 2021 prices for their homes. I've been telling you guys, if you watch the real estate market across the country, but if you look at Florida, it's really focused because Florida is mostly, this older generation. There's not really much industry in Florida, right? So you either have to have money or retire down there, right? There's not really much big money industry. There's like, maybe in Miami, but Miami's super expensive, but you guys kind of get the point. But the bottom line is if you look at the market down there, right, everything is going up and the boomers like, no, I'm not selling my house for less than this. And then it just sits on the market for a year and they're paying, very high property taxes. They're paying very high insurance if they can get insurance. They're like, I'm not selling this for less. Like these younger generation, they got to pay. And meanwhile, I talk to real estate investors who are in that older generation, and they swear, oh no, real estate's not coming down. I'm like, the data shows real estate market is coming down, especially in Florida. No, it's not. No, it's not. People are buying my properties in cash. I'm like, well, what is the age group of these people? Over 50, over 60? The investor's like, yeah. I'm like, well, that generation, it's going to slow down, right? And then who's going to be buying all these homes with no insurance availability and very high mortgage rates and property taxes? Not many people. Anyway, let's continue listening in.
Look fueled.
And that's exactly what we're seeing here with MicroStrategy and all of these other companies that are purchasing Bitcoin through the use of debt effectively, right? And Jim Chanos also said the infinite money glitch. They actually believe that buying $1 for $3 is guaranteed money making strategy. And it's true. I mean, there is a huge risk that people are not looking at. I'm not saying MicroStrategy is going to go under, but all the other companies that are also now starting to get in the game this late in the cycle, it is very reminiscent of what we saw in the previous cycles towards the top of the market. But don't get it twisted. There's a lot of positive things that are happening in crypto. The SEC chair says the agency plans to create new rules for crypto tokens. We're also seeing this, the $12 billion Bitwise revealed that 10 countries are buying 200,000 Bitcoin worth $20 billion this year. Let's listen into what he says at this recent conference. Again, Bitwise, one of the Bitcoin ETF and crypto fund providers.
Are you talking about?
Yeah, so last year ETFs bought 500,000 Bitcoin. Again, remember, the Bitcoin network only produced 165,000 Bitcoin. So it bought 3 times the total supply. Corporations bought 250,000 Bitcoin. Governments, I think this year could buy a couple 100,000 Bitcoin. So I think if you look at those 3 sources, I think they'll buy more than 1 million Bitcoin this year. And where is it going to come from? The only place it can come from is people who already hold Bitcoin. The only way they will sell is if the price goes up. That's why I'm so bullish on the market.
Sorry. Now I'm going to pause right here because what he's saying is there, right? What is happening with these companies that are buying Bitcoin? Forget MicroStrategy, right? Forget Semler Scientific. Think GameStop. Think the ETFs. These are effectively one-time allocations, right? So if a company says, listen, go buy the BlackRock ETF, we're going to invest $5 million in this per year. Boom, that's $5 million in a year. But people look at this as, wow, it's $5 million. It's like, yeah, it is great, but once the buying stops, right? Once the seed investment stops, that initial flow is going to create a demand shock where the demand is no longer where it was. And then there's all this extra supply because the price is higher. People don't think that the price is going to stay below $200,000 this cycle. But guys, as the price goes up, it incentivizes more people to sell. Think about how much Bitcoin has been sold at $100,000 and how many people are in Bitcoin that are like, I'm never selling. How many companies are in Bitcoin that say, I'm never selling. But meanwhile, we still see all of this supply being unlocked. Because remember, if you bought under a dollar or you mined Bitcoin 10 years ago, this is $100,000 straight profit. And so it doesn't matter to those type of people, right? They're just transferring the wealth of Bitcoin to these new people and converting that Bitcoin that they're selling into dollars. And they're going to take those dollars and probably reinvest it into other type of performing assets or safe haven assets like real estate or maybe other stocks, maybe other cryptos, or maybe just leave it in US dollars and make it interest for a while. But that is how the wealth transfer happens. We saw it happen in 2020. We saw the wealth transfer just from homes, right? People bought their homes in 2020, sold it in 2021 for double the price, right? That was a wealth transfer because people felt, in a better position. There was a lot of money flowing around and all that. And so are we in the same scenario with the Bitcoin price and with all of this bullishness about Bitcoin? And is MicroStrategy going to go down? Is it now time to short MicroStrategy? Well, I don't know whether it's time to short MicroStrategy or not. I have let my viewers know because people are irresponsibly long MicroStrategy and they believe MicroStrategy is the best bet in the world, even though just based on the price metrics compared to Bitcoin, it's clearly not. I don't know why it would be a bad idea to short at some point in the future. And it's not just MicroStrategy. As we were talking about a little earlier, Semler Scientific, this is another Bitcoin strategy company that's doing basically the same thing MicroStrategy is doing. And basically, this guy, Han, on X, he said, Semler, the company is now literally free because they show that the market cap, what am I looking at? Yeah, they show the market cap is $382 million, and they show that the Bitcoin net asset value, the NAV, is $393, meaning technically, if you do the math like we just did for MicroStrategy, and you divide the market cap divided by how much Bitcoin they have or Bitcoin they have versus the market cap, you would see how much the underlying you would get in each share. But remember, they're buying the Bitcoin with debt. So you as a shareholder don't actually get that underlying Bitcoin. That's very important to understand. The other thing to understand is that none of these companies besides MicroStrategy have been through a bear market with this. And none of them have bought at the top of the market and been through a bear market like this. Even MicroStrategy, really. I mean, they did buy at the top in the last cycle, but their dollar cost average was much lower. Percentage-wise. Now it's only a 30% lower than where we are. 100,000 to 70,000 is their dollar cost average. This is a huge risk. And so we have to keep an eye on all of these different companies. Semler Scientific, we know Matador is another one now. 21 is another one. There's a lot of companies like that. We just also heard that UK publicly traded company called Vinans is raising $2 million in Bitcoin assets. And so we are starting to see more companies getting involved. But they're doing it at the top of the market, which is like ridiculous to me. What I will be very bullish on is when we do rotate into a bear market, whenever that happens, maybe just a corrective phase of the market, I don't know. But when we start moving down and we start to see some liquidations and some of these companies going bankrupt or not being able to continue their thesis and their strategy with no other revenue sources or cash flow or sources of income, I think that that's gonna be the bottom. And when we get to right after the bottom, it's gonna be a great opportunity for us to look at what all of these different companies and see which ones are gonna continue to hold their Bitcoin, maybe continue to buy Bitcoin. And that could be a great opportunity for the 2028 cycle to be in those companies before the next cycle begins. But I don't know. The fact that we now have billionaires shorting MicroStrategy, and not just billionaires, right? Remember, I showed you in the irresponsibly long MSTR group, one of the big traders in there He turned his portfolio from $2 million to $30 million trading MicroStrategy and MicroStrategy derivatives. I mean, that's a 14x, and you're talking about millions and millions of dollars. And people are upset with him that he sold, saying that he sold out. It's like, he's a trader. He's in the markets to make money. We're not in the markets to futz around and talk about how, in 50 years, MicroStrategy is going to be worth, $48 trillion. Like, who cares what happens in 50 years? We want to know what's going to be happening in the next year, in the next 6 months, in the next 2 years, so that we can position our portfolios appropriately for that. And remember, not every trade is going to be a winner, right? I've traded MicroStrategy in the past and it's been a winner. That doesn't mean now it's going to continue to be a winner, right? I may have shorted something. Typically, shorting is very risky. I don't like shorting markets. I don't like even really thinking about it, because typically short sellers lose, right? For the most part, and they can get liquidated fairly quick. But I do think there will be a time during this market that it is right to short MicroStrategy. I just don't know when. I don't know, maybe we're there already. It's really going to depend on what Michael Saylor does, not really Michael Saylor, MicroStrategy, what they do for future purchases. Because if they continue to sell at the market, this is going to be bearish for the price of MicroStrategy. Over the medium term, the short term, it may be bullish, because if the price of Bitcoin goes up, then MicroStrategy will probably go up. But in the medium term, once that initial spike is over, I think that MicroStrategy is going to come down substantially, especially once the market fully realizes that they're just going to keep selling more on the open market. And this is going to dilute the shares of the stock or suppress the increase of this price of the stock, right? It may not completely keep it low. Michael Saylor may let it ride a little bit before he starts selling some more. But I do think over time, it's probably just smarter to be in Bitcoin than to be in MicroStrategy or any of these leveraged bets, including ETFs, because you're paying fees on the ETFs and there is a little bit more risk. But you let me know down below, like, where are your thoughts? The other thing that we have to keep in mind is that lending is starting to really grow in crypto. We heard Jack Mallers' Strike is doing Strike lending. Now he's saying there will be no rehab application, so your coins being held as collateral will just be held as collateral. But remember, lending is leverage and borrowing is leverage. The more leverage people take out, and they're starting it now at the top of the market, right? Not just Strike, but also Coinbase is doing the same thing. We just heard Coinbase hackers are demanded $20 million from Bitcoin, in Bitcoin from Coinbase, threatening to leak customer data. Brian Armstrong posted this video where he basically said they're not going to be paying the ransom. They're going to cover all the customers that have been hijacked. And effectively, you just have to be really careful, right? Because when these things start to happening, there's social engineering scams. Like Coinbase will never call you. Your crypto exchange will never call you. If you're unsure, which you should always be unsure, just hang up the phone and then just go and contact their support directly yourself. But never click links. Don't believe anything you get in an email. Even if it says Coinbase, check your account. Somebody go on a separate device, go to coinbase.com yourself. Don't click the link because it'll bring you to something that looks like Coinbase, but it's not really Coinbase, and that's how they can hijack the account. So you have to be really, really, really cautious. But this is also kind of risk. Like, we start to see the scams and the thefts increasing. It's kind of like, are we close to the end of the market, right? Because if they start stealing money and then they start liquidating it, this could push the price down and also cause a lot of fear in the market. So let me know what you guys think. Is it time to start shorting? Is it way too early? Is it never a good time to short? Let me know down below. Do you think Jim Chanos' thesis right here of aggressively longing Bitcoin and shorting MicroStrategy is the play? Let me know down below in the comments. Don't forget to give this video a free thumbs up. Hit that subscribe button. That way you never miss a new video. We upload almost every single day of the year. See you guys when I see you. Invest responsibly and crypto on.